Hello, everybody. Welcome to Talk About Houses. I'm Todd.
I'm Juana.
We are going to talk today about the collapse in investor demand in the U.S. housing market. I've got a chart. I've got all the Crash Bro data. We're going to talk about the article it came from. But before we do that, Juana, what is our new deal with advertising for people that watch the channel and ads that show up on the channel?
I don't like commercials, so for the first 2 days, if you watch it in the first 48 hours that Todd posts the video, there will be no commercials. After that, you're on your own, and good luck.
Yeah, if I forget, there'd probably still be no commercials. I did that on one. I think I went 3 days. But yeah, first 48 hours, no commercials. If you like that, put it in the comments. If nobody complains about it, I think we're just going to leave them off for the first 48 hours.
Okay.
It's incentive for you and a reward. Okay, here we go. I saw this on X, the artist formerly known as Twitter. Okay, some of you get that. If you're Gen Z, you're probably like, what is he talking about? Okay, this is Nick Gurley, famous Crash Bro, Reventure, and all the other jazz. It caught my eye because I follow him, and this is what it said. The collapse in investor demand in the U.S. housing market is alarming. In a market like Atlanta, investors are buying 65% fewer homes than they did at the peak of the pandemic. Other markets where investors are jumping ship include yada, 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 and they go down. Jacksonville, Phoenix, all these. Now, first of all, he's measuring the peak of the pandemic. The peak of buying, which as you can see from the chart below, is certainly not a substantial, it's substantially similar to where it was before, right? Let's talk about this first really quick, because I'm going to show some data here. When we talk about investor purchases, what is an investor? What defines investor purchase? Is this only BlackRock or is this any investor?
An investor purchase is a non-owner occupied. So if the person buying the property is not occupying the property, then they are deemed an investor.
Okay, and what are the two types of investors purchases? Like, how do investors buy? What do they buy to do?
So investors will buy to either hold the property and rent it out for income and appreciation, or the investor will buy it, do some minor or major renovations depending on the property, and then turn around and sell it to an end user. So that those investors we generally call a flipper because they're flipping the house.
Okay, and you guys if you watch our channel, you're sophisticated and intelligent because you watch our channel. So you know all this already. You've learned it all over the years. We're going to go through, because what I did was I found the article where he got this data, because you can see it says Redfin and it shows these charts. So I went and found the actual article.
Clearly you have too much time on your hands.
I have a ton of time. It actually took like a minute. The problem is, if you look at this thing, it had 116,000 people looked at it, scrolled through on their thing. So, and this is all they think is investor demand's down 65%. And then they just move on, right? Okay. This is the actual article. And what we'll do is we'll go through the article, some couple key points, and we'll talk about why this is, because he's misrepresented this greatly. Okay, here's the article. This is from.
Okay, do you think he cares? I mean, he got 100,000 clicks, so he's making money. Yeah. He doesn't care.
He's actually getting on TV shows now as an expert in real estate, and he just goes into Crash Bro.
He's making money. That's the point.
Here we go. But the idea here is not to bash him. I really don't care about him. Don't know anything about him. We've sold 3,000 houses. We've flipped houses. We've done a lot of stuff, and we've helped people manage this whole process. But we just want to give you the actual information, because if maybe you saw his thing and now you're like, oh, that's actually not true. Here's the article. Redfin reports investor home purchases declined slightly nationwide, dropped significantly in parts of Florida. So the whole U.S., there's a slight decline. When you see the slight decline, you're going to be surprised. Because when I was like, oh, let's see, is it a couple, 3 or 4 or 5% or whatever? All right. And you can see this article is from March 2025. This is actually where he got all the data from. Maybe he just took them all to find the old article and grab the chart out of there to Crash Bro this. Okay, here we go, Ryan. Ready for this?
Ready.
Investor purchases of U.S. homes rose 2% year over year in the first quarter.
So a 2% increase is a crash. Moving on.
Okay, investor activity has been fairly stable the last 2 years after the wild up and down swings of the pandemic era. Okay, here's the second one. Investor purchase for condos fell 3%. year over year, the lowest level in 10 years, aside from quarter two, 2020. It's largely driven by investors retreating for Florida. So there's actually a lot of condos in the U.S. In some markets, it's like mostly condos. In other markets, probably in the Midwest, place like that, it's probably houses. Vegas is probably more houses than condos, okay? So you really don't have significant, this is within the margin. If this was an election, this probably wouldn't tell you anything, okay? Investor market share is holding steady at 19% of U.S. homes. Investors are buying more high-priced homes and fewer low-priced homes. I found that interesting. So first of all, Juana, the actual number of investor purchases is rising for homes, for a house.
Sure, because we have more homes, we have more investors, we have a greater population. That makes sense. We're going to have more transactions.
Okay. The other thing too, I want to go on his chart here. It shows this massive spike. Now, if you forget the spike and just look at current percentage of investor purchases, they're pretty much in line with this thing goes back 25 years. So they're not like at a ridiculous level that he's made this out to be. Why were there more investor purchases in 2020, 2021, and the first part of 2022? Why was that? Why was there a big, huge bump there?
Well, so there were a lot of transactions throughout the market, whether they were investors or owner-occupied, right? This is when everybody was living in their pajamas and had nothing better to do than go out and house shop. So, between interest rates and the whole pandemic craziness, there was a lot going on, and there were just a lot of transactions, and investors participated in that in kind.
If you're an investor and you're flipping houses, when we were flipping houses, from the day we acquired a house, usually at the trustee sale, until we closed escrow, generally how many days was that?
Generally anywhere between 60 to 90 days.
Okay. We've had them under 30 days, right?
Right.
We have had them in the MLS the day we got it. Like it was vacant, it went in the MLS, it didn't need work, whatever.
Right. I mean, most of them needed work. So the work generally took a couple weeks.
Okay.
And then you market the property for a week or so, and then you've got the escrow for the buyer end. So by the time you're done, it's generally about 60 to 90 days.
Okay. So, but the bottom line is that if you're say you're taking 90 days, you can do 4 flips a year on the same dollar.
Right.
So there were more homes turning because you had investors buying and selling. When home prices are going up, is there more or less risk for flippers? Are they more incentivized to flip houses, or are they less incentivized to flip houses?
Well, they're always more incentivized to flip houses, really regardless of what the market's doing, because the more houses they flip in a year with the same money, the higher the rate of return, right? Because let's say that you take $500,000 and you flip 4 houses in a year, that's one rate of return. But if you take that same $500,000 and now you're flipping 6 houses in a year, your rate of return obviously is far greater because that money has been put to work 6 different times.
Okay, so the reason why there were a ton more is because there were just more transactions.
Right.
There were more had nothing to do. Matter of fact, we actually, in the exact same article, there is this chart, National Investor Market Share. And if you look at this from the peak of what they call buying season there, which is ended basically in probably second quarter of 2022 was when it kind of fell off. You can see that the ownership percentage of market share is not completely tanked. It is still steadily increasing. In fact, if you look over the last 2 quarters, the investor market share has been increasing. So what he's done is he's taken and misrepresented data based on conflating numbers of sales because what he's not doing, he's saying is a percentage of sales. He's just saying total sales. You could do the same thing and say total purchases are down, everything's down. Well, it's down because there's less sales, right? Okay, the other thing is, remember those ugly numbers that he showed that, all those markets like 30, 40% down. In the article, there were actually markets. It showed 38 markets. It was the largest 38 markets. It wasn't just the ups and the downs. And here's some of the markets. He failed to maybe he didn't read this far down. Here's one, Anaheim, California, up 19%. There were 19% more. How about Chicago, Illinois? There were 17% more, right? Los Angeles, California, there were 19% more. Oakland, California, 16% more.
So this is kind of surprising, right? It goes against what you're hearing on other platforms, we'll put it that way, as far as the flight of Californians. Well, clearly there are purchases, there are transactions happening. So California is still a good place to invest regardless of what everybody else says. California, I acknowledge that its population has gone down a little bit, but look, it's a huge state with a huge population, and the numbers support that. They have the transactions.
Portland, Oregon, 28% more. They didn't talk about, the Crash Bros didn't talk about this. More people in Portland. Seattle, Washington, 47%. Seattle, we just sold a property there. It was not a super high end.
No, it was just a little townhouse. It was completely renovated. And it sold in a couple of weeks. It sold for market value. It was not a distress sale. It actually was purchased cash by an owner-occupant.
Okay. But the price range, median, what do you think median price ranges are in Seattle? $700,000-800,000 probably? This was a condo. This was a little townhouse.
Right, and it was in the suburbs. It wasn't in Seattle.
Right. So Seattle up 47%. Those are not going to be little houses. The article did say that the sale of they were higher priced, which is usually. I thought that was the most interesting. That kind of surprised me too. But here's one I really like the best. Las Vegas, 0%. We're the same. We have the same number. Quarter over quarter. We have a pretty healthy market, right? One thing people don't realize about Vegas, Juana, is over half of all homes in Vegas are actually investor occupied. We're 52% according to the investor owned, according to the title companies. We also have a much higher percentage of cash ownership. It's over 50% as well. Right. We have investor cash buyers who have own homes in Las Vegas. So when you hear, oh, these people are selling, we have the same problem a lot of markets have where it's inventory is tied up long-term investors and things like that.
So part of the reason why Las Vegas has a lower home ownership rate is because Las Vegas has been growing for a very long time. So when people first come to town, they don't buy, they rent. So that makes Las Vegas a good place to own rental property because there's a constant influx of tenants.
We have a ton of people who have, now we don't generally work with buyers, we mostly do listings, but we see a lot of this where people will move here and rent a house, and then you find out where they want to live, or they'll realize they don't know the city, so they don't want to just come here and buy something, and that's sort of a common theme here. But one thing, there was a stat in the article. So the bottom line, Juana, because I do have another stat that's pretty cool, is that this is not the end of the world, right? The fact that it's actually up, the number of homes quarter over quarter, year over year is up. But what I thought is really interesting is this. Back when investors were buying all these houses, he was saying, oh my gosh, this is terrible for housing. Like, this is the worst thing possible is investors buying all these houses, right? And now that there's what he says, there's all these less people, this is also terrible. So if investors buy more houses, it's terrible. If investors buy less houses, it's terrible. If interest rates go up, it's terrible. If interest rates go down, it's terrible. Like, everything's terrible for the housing market, right? But this was the interesting thing that Redfin had in the article. It's just like hidden in one sentence. The total number of homes that in the last year, 2024, that investors lost money on. Do you know what that number was?
I don't.
5%. That was kind of surprising. Actually, the median amount of homeowner equity for all sales was like $168,000. So the average person that sold a house, whether you were an investor or not, now investor numbers are included in this. So if you sold your house you had for many years, you might got $300,000-400,000. But if you're selling a house, you're flipping, you might get $30,000, $40,000, $50,000, right? But it was like $168,000 was the number. So it was kind of an interesting stat, but the 5% one kind of surprised me. Now, I don't know how they exactly calculate that, because I don't know that they necessarily know repair costs. Maybe they know, they estimate, or maybe they poll people or whatever. But that's kind of what they said. Now, I will say this is anecdotal information. when we were buying at the trustee sale and flipping, we had our buyer was down there, and his only job was to get the houses. And he wasn't just buying for us, he was buying for a couple other people. He was buying for himself. He'd personally done over 300 of his own flips. It was his career. That's all he did was he lived down there and bought these things and flipped them. He told us, we asked him once, have you ever like really gotten hosed or really lost a ton of money? And he said there were 6 times. He only lost money on 6 out of over 300. And one was, he kind of looked in the windows at the house, but looked fine. But then when he got in, it was a ton of mold. It was a mess. And it was like $25,000 to put the house back. And it's kind of like, he didn't have a huge loss, but it was like, it ate up all the profit. Like there was no profit. Because a lot of those houses, you buy them for $130, you sell them for $170. You put 10 grand into them, and you have maybe $5,000 in closing costs. You get $25,000 out of it, after 60 days maybe. But
So investors actually have gotten very savvy, and most of them have somewhere around 35% is their minimum margin. So the chances of an investor who does this frequently losing money is actually pretty small.
Right. Yeah. The thing we've noticed on our listings, because listings we have now, like I think everyone's getting investor offers, and some are getting multiple offers. They tend to be low ball. Some are higher, but we get significantly under price because they can see what it's worth. They know what it's worth, and
they have to know what it's worth because otherwise they wouldn't make money.
Right. And all the money on a flip is made when you acquire it. It's never like what you see on HGTV. We picked the highest end marble for the kitchen because we really wanted to sell it for more money. It's never that. It's always the acquisition cost. The more money you have to put into it, flip and fix it up, and generally you're just cutting into your when you see those shows. I've never ever seen a flip that we've ever done, and maybe even a Fannie or Freddie flip, where they have done that much work. Like, we did $120,000 in upgrades, and it's like, and we sold the house for $200,000 more. We bought it. Like, you generally don't see that.
No, that's not how you're going to be in business.
No, that's for TV. That's not how it actually works. And that's why when you watch those shows, they generally aren't actual flippers. They're generally just people who do it like Hollywood flipping. But the real flippers are not ever going to go on TV and disclose. And it's not super sexy.
No. What they do. It's like gritty, and they have to grind a lot to get the property, and have to meet a lot of. We used to do that. We go meet people and say, hey. But anyway, so the bottom line is it's not gloom and doom. The market's certainly soft. There's more homes on the market. That's good for home buyers. They're going to have. I think this fall is going to be fantastic for a home buyer. I think there'll be more homes on the market. Interest rates probably drop a little bit. I think there'll be some softness in certain markets or certain price ranges that investors probably start coming in. That's the last thing I wanted to ask you, Juana. Let's say the wheels start to come off in certain markets. Prices start to drop, and what's the safety valve in this to keep them from just falling down to like $1 for a house? Well, I mean, when the rate of return makes sense, investors come in and purchase properties.
Okay.
That's the bottom line. And even non-investors, even owner-occupants, may get off the fence and say, hey, you know what, it now makes sense for us to buy because we can, our payments are going to be such that it makes sense against what we're paying in rent. So when there are opportunities in the market, then the market rights itself with buyers coming in to pick up the slack.
Market forces.
Yeah.
A lot of these markets in Florida and the South, Austin, Texas, but like they said, Florida and places like that, Atlanta, have had substantial price increases. And the rents have gone up, but not as much. So now when any investor is doing their math, they're having to back off on purchases because, hey, the numbers don't make as much sense. Right?
Sure. Yeah.
Okay.
So was that interesting? We hope it was. Leave us your real estate related comments. If you don't like commercials, let us know. If you love the commercials, please let us know.
We'll put them back in. There'll be one every 2 minutes.
We appreciate you watching. Please remember to like the video, subscribe, hit the notification bell, share the video, and we'll see you on the next video. Bye.
Bye.